So when it comes to new technologies and to artificial intelligence, of course, one of the biggest buzzwords in the financial industry right now is the robo-advisor. And one startup from Munich is taking advantage of this knowledge and of this new technology. The CEO and founder Florian Prucker, he is the CEO of Scalable Capital, will be now speaking about this new trend, about this technology. Just briefly about his background. Florian used to work for Goldman Sachs as well, in sales and trading, and now has a fantastic team. And since this year, you're online, right?
This year we are live in Germany, and we yesterday onboarded our first customer in the UK as well.
Oh, congratulations. As you are BaFin regulated and FCA regulated as well.
Correct.
So please give it up
for... We didn't borrow the license.
Great. Give it up for Florian Prucker.
Thank you. Quite a hurdle to present after Morten. Today I want to talk about a theme like software eats the world, and we want to talk about how software and technology eats into wealth management. Quickly about Scalable Capital. We are a technology-driven automated investment manager. We are not just a lead generation platform, we are a real financial institution, or actually we are two financial institutions. We have one entity in the United Kingdom serving British customers out of an FCA licensed regulated investment manager. And we also have a license from BaFin here in Germany to service continental European clients. We're a bit more than 30 people. Most of us work in engineering and finance technology. So it's really about the core infrastructure we are building here for wealth management and not just an e-commerce add-on to a bank. We didn't raise 750 million in funding yet, but it's enough to really build a great business. And as just mentioned, we are live in Germany since the beginning of the year and are about to launch in the UK. For us, fintech needs two elements. Yeah? On the fin side, you need a strong team with financial knowledge, with all the details in finance. It's a very complicated industry under the hood, and we have the experts to service that industry. On the other hand, we need a level playing field. So it's not about circumventing regulation, but being really playing by the same rules as the investment managers and the banks do. Otherwise, you can't compete with them. And it's about market access, using new distribution channels like the App Store to reach your clients easier, cheaper, and more convenient. On the other hand, it's about technology. You can't compete with the banks if you use their legacy systems. Most of the systems we have in place, we build ourselves because existing products are not able to service this new market. Regulation matters. In investment management, trust is the most important asset. And trust you will only get if you obey to the regulations. You have to play by the rules to be accepted in the marketplace. Regulation also allows you to go after the full value chain. It's not just about generating leads, but it's really about replacing core services, investment management, lending, payments. You can only do that if you are regulated. And last but not least, regulation allows you to internationalize. The European market is more and more harmonized. We are seeing, having launched two financial institutions within 1 year in Germany and the UK. Yes, the language is different, but probably 90% of the rules we have to obey to are very similar. What do? We select the cheapest, the most efficient, and the most diversified ETFs for you. We have algorithms in place which continuously screen the market of 1,500 available ETFs to retail clients and pick the best one of them. The ETFs we pick, they are about 75 to 80% cheaper than traditional mutual funds. Because in ETFs, it's about you get what you don't pay for. Thereafter, once we have picked the ETFs, we have algorithms in place which dynamically risk manage your portfolio. We continuously run simulations to see how much your portfolio is at risk. If it's too much, we automatically rebalance it in a way to make it less risky. If there's not enough risk in the portfolio, we automatically rebalance it in a way that you have more risk in the portfolio to not give up returns. What is the result of that? The result is a portfolio which dynamically adapts to the market environment. It's not about static weights, about model portfolios. It's really about a portfolio which, by rebalancing, is always adjusted to be suitable for you. And what does that? The result of that is that you are always invested. It's not about market timing, it's about time in the market. As a client, you only have to do two things. You have to tell us how much you want to invest, and you have to tell us how much risk you're willing to take. Because risk is your currency for returns. If you take a low risk, you have more certainty. That's more suitable if you want to save for a house in the near term, or you're close to retirement. If you take more risk, and that's what we see mainly for our young clients, you have more upside. And that's what you should have if you invest for the long term. And all of that is happening automated. You don't have to do anything. After you made those two decisions, we do everything for you. We pick the funds, we invest in them, we reinvest distributions, we rebalance your portfolio, and we report to you. We give you full transparency, down to the single penny. Ask your advisor, or even worse, your insurance broker, for the level of transparency we give you on fees. We are very certain that this fintech revolution is about to happen. The reason for it: fintechs can provide better quality. They can provide more suitable products for their clients. In investment management, it's all about fees. By keeping the fees low, we can provide clients with a better risk-reward ratio. We give them real-time transparency, not just cryptic reporting at year-end with hundreds of lines which nobody is reading. We give you transparency on every single trade, on every single distribution, on every single FX conversion in our app in real time. Fintech also allows you to be truly personal. This is often an argument you hear by the incumbents, that they say, oh, it's only online, you cannot really service your clients in a personal way, only an advisor can do that. But advisors are not that personal. They have lists of products they have to sell. They are not that flexible. They hear what you're saying, but in the end, they will pick one of the products which is on their list. They are salespeople, they are not advisors. As an investment manager, as an independent investment manager, you don't have that product lists. You can act truly independent. And by software, you can also act truly personalized. Because we have algorithms in place which take into account a lot of different elements, a lot of different things our clients answer us in our onboarding questionnaire, and we can really adapt the portfolio to their own needs. And last but not least, it's massively more cost efficient. By really cutting out all the meat, by having no middle office, no back office, no salespeople, you can get down the cost to a fraction of the cost in the traditional investment management industry. I will leave you with a quote, and Deutsche Bank, don't take this as an offense, but I think it's quite applicable to what's happening now in the industry, where the incumbents are moving into the industry with a lot of money and trying to basically change the world just by money, but not with true technology in place. Thank you very much.
So, Florian, how long would you say would it take to outperform human beings then with this kind of robo-advisors?
I think it's happening already, and people are outperforming traditional investment managers and banks by investing into ETFs themselves. The problem is the entry hurdle is quite high. It's difficult to find the right funds. It's difficult to manage an appropriate portfolio for you. With technology, we can now give access to this great instrument, the ETF, to the masses. So everyone can outperform the traditional banking solutions.
How many jobs do you think this is going to cost?
I think, and we already showed that with the recent B2B cooperation we entered into, that it's not about destroying jobs, it's about changing jobs and enabling the advisor, again, to make him really an advisor. Yeah, it's about, like advisors spend a lot of time in doing manual tasks. If we give them a digital solution, they can really focus on financial planning, on estate planning, on stuff which is hard to automate. Yeah? And really provide a value add to their client instead of doing things where software is much better. Software is much better in investing into a broadly diversified global portfolio, but a human being is probably much better in something as personal as estate planning.
How much time do you personally invest in customer research and finding out about the needs of your customers?
It's a continuous topic. So we talk to customers every day. We invite them for focus groups. We talk to retail aggregators which have a lot of access to customers and listen to their needs. I think it's the only way to be able to compete in that market, to have a very close link to your customer.
Okay, thank you very much, Florian.
Thank you very much.
So